Hello traders, Nick Shaheen looking at FSLy. Stock, I've traded it, caught the dip. It looks like it has a swing upwards opportunity, but before I do that, we have to trade within the confines of a whole market. In other words, regardless of how good this opportunity is, it needs the help of an entire market. And for that, it's not an obvious thing because these are not obvious points of entry for the whole market. In fact, for the next 2 weeks, I'm expecting debacles. Some trouble ahead, definitely by February 5th. This is my thesis. I'm still long a few things, but I'm definitely hedged. How am I hedged? I've sold call spreads in the indices, some of which have already panned out. I've shared videos on how to buy a debit put spread in the SPY to kind of like a blanket cover yourself. Plenty of ways to do it. I would defend directly inside a chart. Like if I'm long Apple, I would defend myself via Apple if it's a big investment. If you're thinking, oh, what if I don't need it? Let me ask you this. If you own the car, do you have insurance on it? You plan on crashing? No, but you still pay your premium. I don't know how this is different. It's an asset. It's probably worth more than a car, and you're still too stubborn about not protecting yourself, even for you know what? With options, you don't have to buy the insurance. You can just rent it. You buy it and you change your mind 2 weeks later, you can sell it, plus or minus. You can't do that with a car insurance. At least here you have the option. Anyway, back to FSLy. I'm not going to argue the fundamentals. That's on you. All I can say is not a cheap company, but cheap is not what we're looking for. Growth is what we're looking for. And this is a daily chart. This is what most people look at. It's about a year's worth of data. You can see visually that it has gone off the low with a sequence of higher lows. You can probably draw a line like this, and on the dip here, this dip was ridiculous, but the whole confine got hit hard. I think they revised their sales 5%, and the stock fell 30%, and then somebody else reported, and then they reported. It was like a calamity of errors. But I bought the dip. It played out. It was a little tough for a little bit, but it played out. And this dip I thought would stop right here, but it stopped here, which is a place that I have good confidence in support. Why? Because when they say price is truth, that's what they mean. That orange line is automatically drawn. I don't draw that. This is the point of control. This is where the bulls and the bears, this is where it suffered the most buying and selling activity. So plus above it and a little bit below it are the second two most places. And from the volume bars on the left, those bright yellow things. So it means a lot of people have interest in it. Buy it or sell it. When they say, oh, they are selling or they are buying, no, they're not. They're buying and selling. You don't buy something off the shelf. You're buying it from somebody else who's selling it. I think they're stupid. They think I'm stupid. It's a contest. The charts are agnostic as to who the company is, and that's the stuff we're talking about today. So I would buy the dip into 81.20 with a tight stop. Why? Because I have confidence they will buy it. I have confidence they will buy it through 77. That's my opinion. Put the stops based on personal preference. If I don't care about seeing some red for a little bit, it depends on how I'm buying the dip. If I'm buying shares, I really don't care. If I'm buying calls, I might care, so I might want to go way out in time for the calls or do some sort of a call spread. If I'm selling puts or put spreads, I definitely don't care because I don't need a rally to win. All I need is for it to hold above my risk. So it depends on how I'm trading and what I'm trading, what time frame. All right, so let's go into 120 to see if we can get smarter. All right, so I expect some sort of a selling into 95, definitely into 96.5. And most definitely into that ledge up here at around the round number of 100. However, if I go back to the daily, and if I'm a not long-term, medium-term investor, this could be a swing trade back to the reversion to the mean. So this blue-red is the mean, basically just a regression analysis, basically. And it draws it and puts it up there for a visual reference. I don't use it to initiate trades. I use it to kind of say, okay, I know what's going on. They overdid it. Somewhere in the middle lies the truth. So if it just does that with time, if you let time pass and it just meanders this way, and it goes above this, that's a trigger. Here, I probably say I expect seller, and it does. That's what that note says. It's an alert for me. This one probably says chase. I'm saying 140 question mark, but I do expect a lot of resistance, especially at 120. So let's see what happens here. This was a note from a firm I was sharing with the people in the chat room. Good business, by the way, the Affirm thing. Let's say it does that. Whatever, comes back to here. Maybe it dips down here one more time and comes back to here. Let's say it comes back to here and just breaks out. Now you've had a failure and another failure, but this one fared better. So now maybe they do another one. So you've heard of cup and handle. Okay, that's not a nice looking. It's like two bowls or uneven boobs if you want, whatever you see in there. Whenever they do go above it, they're going to come back and test it, and then off to the races. By how much? It depends on what pattern you draw. I like to look at, instead of paying attention as to how much, is where are the potential sellers. There's going to be sellers here, here, and definitely here, obviously. So, you know, it might do some sort of a jog like this, and I've managed my longs this way. So if I sold puts or put spreads down here or down here, I don't care where it goes, as long as it goes. And if I bought calls or call spreads, I don't want to buy them up here, because then I guess the right direction and I guess the wrong magnitude, the wrong size, then I lose. How annoying is that? No. I want to stay realistic with the upside potential, and I want to give myself a good odds. Like, what is the selling put thing all about? It's easy. Would you own $70 shares of FSLy? If you say yes, then I would go out. For me, if I say yes, then I say, all right, so who wants to sell their shares at 70? Somebody out there wants to. I would sell them a put for 70, and they'll pay me a premium. I'm going to make up a number. I haven't looked. If it's $1, that means I make money right now for the opportunity to buy somebody's shares at 70. When it hits there, I may wake up owning shares, and I keep my dollar. So my break-even point is 69. So I got into FSLy in that matter, and 22% lower than current price. How bad is that, right? I put bad in quotes. It's not bad. Now there is a pitfall here. I just saw that. So if, oh, look at that. I do have notes. If it loses this, if it triggers this pattern, it might do a little jog like this, which brings the $70 number into play. All right, so see, I already put a note of resistance. I already put the upside potential, and it's moving alongside of the If you haven't seen it, these look ridiculous. I just drew one for Palantir, and it was on the money. So what I was doing with this, I don't know when I did this. I can't remember. I'm basically saying, let's draw the right hand, the cup, the handle to the cup. If this is a cup, then let's draw the handle, or whatever you want. Let's get to the neckline where we failed before. I'm not as optimistic about this path than I was for the Palantir one. The Palantir one was picture perfect. Enter here, trade the range. So it's fallen into support, enter to trade the range. That was the notes to myself. Support zone definitely held. See that white thing? That's this downside was the potential, and half of it played out. Maybe they want to finish the job. I tell you one thing, I don't want to be long it if it loses 62. It's not going there. This cluster is pretty strong, but we'll see. Again, it's not trading inside the vacuum. It's trading inside the whole market. So if the market crashes, can it go there? Sure. I've seen it happen. Amazon loses 40% almost every year, and it's a great company, right? So here's my trigger line. Lose this, and you might see this. Earlier I drew it this way with nice fine lines. So some people like to chase the breakdown from here if they want to short it. I'd wait and short it here if I'm shorting it. So the upside opportunity has problems. It may eventually come to here. So buy the dip. I want to say buy the rip, but you've been missing out on all of this. Or own it for this breakout opportunity. How about that? Okay, that would be the best way to say it. There is more information at a lower time frame. So this is a 15-minute chart for the active traders. I expect some support into 90, 89.5. This candle is telling right there, 89. This was fail, They came back, they took it out, tested it, and now they might test it again. So there should be buyer inside this shorter time frame. See how time frame changes the perspective? Here we are, opportunity to trade. A breakout from 92.50, if you want some buffer, 93.1 because of this candle right here. Then you might catch a ride to 96. So in this case, I would be drawing the candles differently. I'm not going to turn on the pictures because that'll bring all the junk. So you have this trade going on, this trend going on, this tight. Something's got to give. Break above this, it might do this. Or come back to here, try it again over here. This looks like mumbo jumbo to you, but it's not. I promise you, it works out. Look, Nagui cup and handle will get us to here anyway. So follow me for a while. Look at my videos. It works. All right. I'm not a technician, by the way. I'm an engineer in the younger years, and I turned into finance and then started trading. I didn't start trading. I was trading all along, and then I found options, and then I found people who are excellent chartists, and I learned a few fundamentals, and I keep it real. I don't have any indices. I don't have MACD. I don't have Ichimoku. I have one thing on the chart here, which is the volume profile. That just, for me, what I use, number one tool, can you guess? I've said it in my other video. Eyeballs. I can look and see levels that matter, right? Like this level mattered. So carry it forward. You can see that machines care about it too. Look how many times it comes into play. It's going to come into play. Look at this. So it's going to come into play. Levels. Volume profile confirms that level. Like, if you look at it, if you step back visually, you can split the action in half almost. You've heard Fibonacci. You don't need an extension Fibonacci to know that this is the low, this is the high, and somewhere in the middle lies the truth. This is actually where they've sold it and bought it the most. So let's see. Let's confirm that. That's the Fibonacci 50%. It's not rocket science. You can do it. You don't need to be a technical analyst. Just learn a few fundamentals. You'll get there.